Bro, today's market is opening with a completely different tone compared to the last two sessions. On Friday, Nifty and Bank Nifty held strong levels, volatility stayed extremely low, and DIIs continued to dominate FIIs. But overnight, global markets cracked sharply, SGX Nifty has turned negative. And now the big question for today is very simple. Is this just a healthy pause, or is the market finally ready for a deeper pullback? Let's break down everything calmly, logically, and step by step before the opening bell. Overnight, global markets sent a clear warning signal. The Dow Jones fell by more than 245 points, the S&P 500 dropped over 1%, and the Nasdaq saw the sharpest damage with a fall of nearly 1.7%. This was not a random move. It was broad-based selling across equities. European markets also closed weak, with the FTSE, DAX, and other indices ending in the red. Asian markets are following the same tone this morning, with Nikkei and Shanghai also trading lower. This confirms that global sentiment has shifted from risk-on to risk-off. However, futures are trying to stabilize slightly. Dow futures are up around 96 points, S&P futures are marginally positive, and Nasdaq futures are slightly green. This suggests that while panic is not expanding, confidence is still fragile. Now let's come to the most important early indicator, SGX Nifty. SGX Nifty is trading around 26,053, down about 81 points, indicating a negative start for Indian markets. The SGX high is near 26,053 and the low is around 26,025, which tells us that global traders are not expecting aggressive buying at the open. This clearly signals that the Indian market is likely to open with pressure, and buyers will need to prove their strength again. Commodities are trading firm this morning. Gold and silver are up, which indicates a slight shift towards safe haven demand. Crude oil is also trading higher, with Brent near 61.39 and WTI near 57.70. This is mildly negative for inflation-sensitive sectors like paints and aviation, but supportive for energy stocks. The USD INR is stable near 90.56, which means there is no immediate currency shock for Indian markets today. Now let's talk about the most important pillar supporting this market. On 12 December, DIIs bought nearly 3,869 crores rupees, while FIIs sold around 1,114 crores rupees. This confirms one thing very clearly. Domestic institutions are still defending the market aggressively. As long as DIIs continue buying at this scale, sharp crashes become less likely. But at the same time, FII selling ensures that upside remains capped and volatile. On Friday, Nifty closed near 26,047 after opening at 25,971 and sustaining above the psychological 26,000 mark for most of the session. The structure was positive, with higher lows and steady buying on dips. Bank Nifty closed near 59,390 after opening at 59,401. However, despite multiple attempts, Bank Nifty failed to sustain above the critical 59,420 to 59,550 resistance zone. This failure is important because it shows that sellers are still active at higher levels. Advance decline remained positive, but momentum clearly slowed in the second half. Nifty VIX closed around 10.11, which is still extremely low. A low VIX means traders are confident, but it also means the market is vulnerable to sudden spikes if fear returns. Any move in VIX above 11.2 today can instantly increase intraday volatility. Technical levels for today. For Nifty, the first support lies near 25,970. If this level breaks, the next support is around 25,900. On the upside, resistance comes near 26,090 zone, and a strong breakout above this zone is required to invalidate the bearish SGX signal. For Bank Nifty, support lies near 59,200 and then 58,950. Resistance remains very strong between 59,420 and 59,550. Unless this zone is crossed with volume, upside will remain limited. Sector view: what to expect today. Banking stocks will remain the key focus. Private banks still look relatively stronger compared to PSU banks, but Bank Nifty must reclaim 59,420 to regain bullish momentum. IT stocks may face pressure today because Nasdaq saw heavy selling overnight. Even though the rupee is stable, sentiment for IT remains weak. Metals showed strong momentum on Friday due to rising copper prices. But with global equities weak, metals may see profit booking. Defensive sectors like FMCG may see selective buying if volatility increases. Market expectation for 15th December. Based on global weakness, negative SGX Qs, low VIX, and strong DII support, today's market is likely to open weak or flat and then attempt to stabilize. If DIIs continue buying on dips, the market may recover gradually. But if global pressure intensifies and VIX spikes, we may finally see a deeper intraday correction. Today is not a chase the breakout day. Today is a patience and level-based trading day. That's the complete pre-market setup for today. Trade with discipline, respect your risk, and let the market confirm the direction after the opening. Subscribe to Wealth Maama for daily updates.